Everyone good?
Good, good.
Did not. I sent it to Jay, but I did not print it.
So it'll be on here.
Correct. Yeah.
Y'all ready?
Yeah.
You guys good? Okay.
Yes.
Good evening. I'd like to call to order October 26, 2021 Finance Committee regular meeting. Please call roll.
Chairman Reinhardt,
Here.
Member Prisicatio is absent. Member Bush is absent. Member McNamee Cook. Here. Member Hoagland.
Present?
Thank you very much. If you guys can take a quick minute and review the minutes for me.
I've gone through them. Mr. Ortiz has done a beautiful job again.
Thank you.
All right. Before we do anything, it'd be rude of me not to recognize Ms. Cook as the newest member. Welcome to the board. I appreciate you volunteering for this.
Thank you.
Not many people want to do this, and we appreciate you.
Thank you.
If you guys had a minute to review the minutes, Chair will take a motion.
I propose that we pass and accept them.
Got a recommendation for the approval of minutes for July 26, 2021. Do I have a second?
For a second.
Oh, second. Sorry.
All right, I have
Sorry.
no problem. I have a second. All in favor of the minutes for approval, say aye.
Aye.
Passes unanimously. All right, we're moving current business item number 3. Next on our agenda, since we have someone on the phone waiting. So, Donna, ball's in your court. I can't hear you.
How's that?
Much better.
So sorry. So we have Scott Sweeten with PFM Asset Management Group on the phone, and Scott is going to review with us the quarter ending September 30th, 2021 with us. Scott, can you hear us?
Hello, Donna. I can barely hear you for some reason. As long as you can hear me, that's
You just got to
really
talk
all that
more.
matters.
We can hear you.
We can hear you.
All right, perfect. Hello, everyone. Well, good evening. This is Scott Sweeten with PFM. I'm actually just going to walk you through the quarterly performance report. And my goal is to just keep it less granular and basically just touch on a few topics. If you do have any specific questions, I'll be happy to answer that. And Donna, you can just let me know when you're ready, and I'll tell you which slide to start on.
Okay, I'm ready. Thank you.
Okay, we can just move to slide 3.
All right, we're there.
I just want to make sure we're looking at current market themes, correct?
Correct.
Okay. So the first topic, this is continuing to be what dictates the landscape of the market, COVID-19. However COVID goes, so goes the economy for the most part. We have noticed a pretty significant improvement in the 7-day moving average for new cases, so that's certainly a positive aspect. The U.S. economy has been characterized by a few things: supportive monetary policy from the Federal Reserve, stagnating labor market growth, even though we have started to see some improvement there, and heightened inflationary pressures. We continue to hear the debate of, is the inflationary pressure transitory or is it more longer term, if you will? And then looking at the Federal Reserve, essentially probably in November of this year, we're going to be looking at the Federal Reserve starting to taper their asset purchase program, where currently they're purchasing $120 billion between treasuries and mortgage-backed securities. So that should start probably around November, dependent on any changes in economic numbers that come out between now and then. And most forecasters are now expecting the Federal Reserve to potentially start to raise rates in 2022, which is a little bit ahead of schedule now. Most expectations last quarter, we were looking at 2023. And finally, the fixed income market has been reacting to many changing dynamics. The short-term yields, essentially there has been no movement there. Those are anchored by the Federal Reserve policy. And long-term yields have been rising primarily due to inflationary pressures and the potential of the tapering beginning in November. And we can move to the next slide, Donna.
We're on page 4.
And again, as I mentioned, just looking at the left portion of the slide, U.S. new cases reported daily. The gold portion is within the U.S. The blue line is actually globally. You can see a significant trend downward, both domestically and internationally. Currently, our 7-day moving average for new cases is a little over 73,000. And that's actually a 15% decrease from the prior week. And just to put things into perspective, back in August, roughly, we were over 165,000 for the 7-day moving average. So we have noticed a pretty significant trend downward from there, which certainly is a positive. We can move to the next slide, Donna.
Okay.
Now, looking at GDP, for the most part in Q1, we had a strong number of 6.3%. Q2, we came in at 6.7%. And for the third and fourth quarter of 2021, expectations are anticipated to be lower than previously forecasted. We're looking at roughly 4.5% for Q3 and 5.6% for Q4. But again, for the calendar year of 2021, that would still be pretty significant growth coming out of a recession back in 2020. And we can look out into 2022 and start to see things normalize a bit as far as what we're used to historically. And we can move to the next slide, Donna.
On page 6.
And we should be looking at essentially the labor market unemployment rate, correct?
Correct.
Okay. Now, this is through the third quarter. I'm actually just going to give an update here. In September, we continued to see further improvement in the unemployment rate. We dropped from 5.2% down to 4.8%. We added 194,000 jobs in September. That was a pretty significant miss. Expectations were for an addition of 500,000 jobs. But again, a big part of that, the labor force participation rate, I believe in September was 61.6%. So we're still significantly below where we were at pre-pandemic. We had unemployment at 3.5%, and the labor force participation rate was around 63.3%. So slow and steady. We are starting to see some improvement there. The biggest challenge in the labor market is trying to get people to work. I think we can all drive around our local neighborhoods and cities and see hiring signs essentially everywhere, offering sign-on bonuses, significant raises in pay, things of that nature. So hopefully we'll start to see things improve significantly on that end. Next, we can actually go to slide 9, Donna.
Okay, we're on page 9.
Okay, and this really gets us into the discussion of the economic indicators and inflationary pressure. Looking at the consumer price index, this is one of the handful of indicators the Fed monitors. In August, that came in at 5.3%. In September, that actually came in at 5.4%. So again, a slight tick up. And just to put things into historical perspective, a year-over-year increase compared to last year, that's actually the highest level since 1991. And if we start to look at some of the other indicators, the producer price index, for September, that came in at 8.6%. That's the largest year-over-year increase since 2010. And just looking at PCE, which is the main number that the Federal Reserve monitors as far as inflationary pressure, that's actually stands for personal consumption expenditure. And historically, they've tried to keep that below 2% to keep inflation in check. They've taken a completely different stance now where they're going to allow that to run above 2% for the foreseeable future until we start to see significant improvement in the labor market. And just to give you an idea, the August PCE number came in at 4.3%. So again, significantly above that 2% level. So for the most part, it seems to be the consensus, at least last quarter, was that inflationary pressure was going to be transitory. Now the Fed is starting to acknowledge the fact that these inflationary pressures may be around longer than anticipated, primarily due to supply chain bottlenecks. And we can move to slide 10.
Before we move on, could I ask you a quick question? In addition to
Sure.
these supply chain problems, what other areas of our economy are contributing to this incredible inflationary growth? Is it the oil or tied in with the pandemic?
That's a great question. Just from looking at energy, in particular oil, trading above $80 now.
Yeah.
Most commodity prices are at levels they have not been at in over a decade. Aluminum is at a 13-year high. A lot of the materials that were necessary for construction, those, for the most part, continue to be at very elevated prices. So, yeah, again, a great question. Outside of just the supply chain bottlenecks, we are starting to feel pressure pretty much across the board in many different areas.
Thank you.
And we can go to slide 10, Donna.
We're on 10.
Okay. And just a synopsis here, the Fed met on September 22nd, and basically, in summary, they stated that the economy had showed a recovery much faster than anticipated. They did say that they were probably leaning towards the tapering program to begin sooner rather than later, and potentially going out around 2022, they may be looking at raising rates, and they would not raise rates until they actually completely stop the asset purchase program, which currently is at $120 billion a month. So we can just move on to the next slide. This is just a great visual to show how things have changed a bit. This is the Federal Reserve's September dot plot. And this essentially just shows where each Fed member has has their expectations as far as raising rates. Now, back 2 or 3 quarters ago, everything was essentially aggregated in the 2023 area. Now we're starting to see a pretty big dispersion in that 2022 area. So most forecasts are that the Fed is going to start raising rates in 2022. And if we just go to slide 12, this will be the last slide I touch on for the market update. This gives you a pretty good idea of where the yield curve was at as of September 30th. Now, your portfolio is between that 0 and 5-year category, and you can see a significant steepening of the curve within that range. So we have started to see much more attractive yields in that area. The only downside is as yields increase, there's a inverse correlation with the price of that security, which would depreciate. So that's why you're starting to see most of the benchmarks have been either flat to negative in the last 2 quarters. But just to give you an idea, looking at the 5-year time frame, that's showing 0.96%. Currently, that's about 1.18. And looking at the 10-year, that's showing roughly 1.49. That's increased to about 1.63%. So we have started to see much more attractive yields due to a lot of the commentary from the Fed. And Donna, we can move to 17.
We're on page 17 now.
Okay. And this is just a good visual as far as the account summary. We can look at the upper left portion, the PFM managed account, 29,799,160. The sector allocation to the right, you can see you're well diversified, high credit quality, 70% is in treasuries, 24% in agencies, 6% in corporates. And the maturity distribution on the bottom portion of the slide just gives you a good idea of where we're able to invest per your investment policy. We can move to the next slide, Donna, 18.
Okay.
And I'll just touch on yield at market and yield on cost. Now, yield on cost is actually what your portfolio is currently yielding, 0.78%. Yield at market of 0.48%. In theory, that's indicating if we were to sell everything in the portfolio and we had to go out and repurchase everything back in the current environment, we would be looking at roughly 48 basis points. So pretty significant difference. And we can move slide 19, Donna.
Okay.
Now, really the purpose of this particular slide is to show if you are within the limits of your investment policy. The blue shaded region is where you were allocated at the end of the third quarter. And the, let's refer to it as khaki. The khaki portion of the bar is indicating the maximum levels permitted by your investment policy. So you can see for the most part, you've got a very healthy buffer across the board. So that's a good situation to be in for you. And the next slide, Donna.
Okay.
This is, again, just a breakdown on the, per your investment policy, what the maximum maturities allowable are within the policy. So U.S. Treasuries, you're certainly within the time frame. Federal agencies, again, well within that time frame. And corporates, again, still well within that time frame. So in regards to a compliance aspect, you're well within your investment policy limits and continue to be. And the only other slides I would touch on, these are fairly new. We can move to slide 21. This just gives you a good idea of the diversification of the portfolio and also the rating from the three most recognizable rating agencies, Standard & Poor, Moody's, and Fitch. So you can see the breakdown for treasuries, federal agencies, and corporates. And finally, we can move to slide 23.
Okay.
And really, for the most part, we've discussed some of this already, but the average credit rating for the portfolio in the upper left portion is AA. Your portfolio effective duration, 2.67 years. The benchmark effective duration, 2.59 years, so pretty much right in line with the benchmark. And you can see the distribution of the credit quality on the bottom left. So again, well diversified, high credit quality across the board.
May I ask another
And
quick question?
Sure.
What strategies do you use in your diversification to combat this inflationary scale so that money we're putting in, we're getting a little more than what we get a 0.2 at a bank or what have you? Do you have a definite strategy?
Yeah, essentially what we do, a lot of it relies on our communication with the client as well. So, we have to have a good idea of your cash flow needs, things of that nature, how long we can actually tie money up for. If there is liquid cash in the portfolio, then again, if it's discretionary, we'll go ahead and actually find the best investment within the limits of your investment policy. But for the most part, given current market conditions, the supply can be an issue. So with the Federal Reserve buying roughly $120 billion a month, that limits some of the supply. But in every case, every day that we put money to work, we're trying to find the best opportunities available. And as I'm able to show you more transactions as our relationship matures, since we just came aboard this year, so I'm usually able to give much more specific examples. But since we inherited securities, we've had to maneuver around a bit until some of that is freed up as well. So
Thank you.
I hope that answers your question.
Yeah, thank you.
Okay. And Donna, we can move to slide 24. I think this is primarily the slide that most people are concerned about. The portfolio returned 0.05% for the quarter. Now, again, that may not sound significant, but if you actually look at the benchmark, which your benchmark is the ICE Bank of America Merrill Lynch 1 to 5 year U.S. Treasury Index, you can see that was actually flat, or 0.00. So we outperformed the benchmark by a pretty healthy margin, even though we had a very significant steepening of the yield curve. And that would be all the prepared remarks I have regarding the actual report. I'd be happy to answer any other questions.
It's impressive that you were able to beat the benchmark.
It doesn't sound impressive with a number, but in relation to it, that's the main thing. And I don't know, Donna, if you're able to pull up the quarterly transactions, I just wanted to give you some specific examples of where we're able to put some of the money to work.
Yeah, we're bringing those up now.
Okay. And I'm just going to touch on a few. I just like to give specific examples as we go along. I think it just makes much more sense that way.
Okay. We're looking at the quarterly transactions now.
Okay. All right. Just for instance, the top line, you can see these are corporates that we've been able to purchase. AstraZeneca, we were able to pick up that at 1.17%. So we're starting to find some attractive yields out there. Looking a little further down, America Honda Finance corporate notes, 1.32%. Caterpillar Service corporate notes, 1.19%. So you are starting to see some examples where we're able to capture some rates above 1%, which I know is a significant number for you all, and I know specifically Donna. So, as things start to improve a little bit, as yields continue to increase, we're trying to take advantage of that as we can. And those would be all the prepared remarks I have. So.
All right. Are there
Any
other
questions of him?
questions?
I'm sorry.
No, you go right ahead.
Thank you, thank you.
Any questions of Donna? Looks like we're heading in the right direction for now.
Okay.
Very good. Thank you, Scott.
Thank you very much. Have a good night, everyone.
Thank
too.
you,
Thank you.
Scott. You as well.
All right. Next is previous business, update on the budget and millage.
Wendy Colazzo, Finance Director. On previous business, obviously the update for the budget and millage on September 23rd was the final and second public hearing for both the adoption of the budget and millage. We adopted a $170 million budget, one of the most conservative in the city to date, and adopted the millage at the standard rate for the last 8 years at 5.1128 with no change affecting the city of St. Cloud. Item number 2, update on the matrix. I think this is one of the final updates we'll have on it. Obviously, it has been completed and, printed. As we remind everybody, there was an operationally driven report that analyzed the entire city and its departments and where things were suited either better or more efficient. One of the components that we felt was missing and we are enhancing now is that the financial piece, where it's great to know what operations, where they should be, but some of the recommendations are just that we're taking them in stride and phases. For example, we can't deploy out and hire 33 new positions in one fiscal year. So what we did for fiscal year 21-22, we allotted 18 positions across the entire network, which cost the general fund about $3 million. So we're doing it in phases and good intervals as far as capacity is concerned. What that also stemmed, and another piece that the city manager added to that, is currently we are doing a salary update analysis that is being done by the MGT group. And what they've done is gone through all the director, the department heads, the staff, and had everybody update their positions, make sure that they're leveled up in order to analyze them, and they are in phases with that, which is the point team on that is the HR department who's leading that effort, and we'll soon see that. Normally we have every 3 years we need to do a salary analysis, and the city manager is doing it about a year earlier this time versus a little bit later. So we'll have updates on those items for you once we have any results. At this time, they're still doing the analysis. As far, like I said, as the matrix concerned, we have everything. We are assessing as it's presented to the city manager and operationally, as well as now financially feasible. Any questions I can answer about that?
Wendy, on the 18 that are approved, does that include, say, the police, fire, all departments, or is that a separate fire and?
It would normally, in the original request, there was police department, but we did not award any police officers in that 18. What we did was some communication, I believe one communication, if I'm correct. However, since then, we had also already added 3 new firefighters. Fiscal year 21-22, we're adding another 3. And then we're going to look at police and fire again as we go through the year and those needs are assessed. But in coordination with the chief and the city manager, the chief has, kind of analyzed what he has and he's working with it so that, we can kind of phase what we need with public safety in a good interval that we can, sustain. So we're working towards, it's not a no, we're looking at it every quarter to bring that up to speed as we fill vacancies first, and the need arises for that, so.
Thank you.
Couple things. When's the projection for the analysis to be completed?
I don't have a drop-down date, but they were at 3 months completion by December to have, something preliminary. But with the holidays and everything, I will get you a firm date if they have something, but I know they had soft. Right now was December, some preliminary, and they may have had updates since then. I just don't have that. But a couple months ago, I had December as the first stab after they receive all the surveys for the positions. But I will verify that for you and see if they have a better date.
No problem. I just was curious if we'd be able to hear something on the 26th, our next meeting.
I'll confirm that for you.
Yeah, I mean, it is, I was just curious if would we have any ideas by that point?
Yep, I'll definitely confirm it.
When you were talking about staffing for police, and we'll do it as we need it, where are they at with the need, like staffing levels? Are they where they should be, or are they below? I know Chief usually says he's below, he's always needing to hire like 10 people. Do we know where he's at in that?
I believe they have 7 vacancies at the 7 police officer vacancies. They've hired a few over the past couple pay periods. They might be down to 6 now.
Okay, just
It
curious.
was 10 at one time.
I thought there were, 10 was in my head, I just didn't know. But that was just vacancies, not
That is
new
correct.
positions. So,
Correct.
okay. It's tough, man, to get people out there. It's it's really challenging. Any questions of her at all?
No, no.
Thank you for that. The budget was really lean. That was that was impressive. Very pleased with that. All right, current business. Our vice chair, for whatever reason, had to step down, and we have a vacancy in the vice chair position. Basically, it's up to either one of you if you have any interest in it.
I'm available, willing to serve.
You're willing to serve. Any interest in it yourself at all?
I don't think so. I'm going to get my feet wet first.
Completely understand.
You don't understand the salary and everything yet?
I will take a motion if you want to make a motion for,
It sounds kind of personal accreditation, but I would propose that I be approved or accepted or whatever the proper,
I
be vice
second.
chairman.
I second.
all right, I guess we have a motion and a second. All in favor, say aye.
Aye.
Passes unanimously. Our new chair has been appointed. Thank you for volunteering. All right, next, Wendy, I guess you got us an update for us.
Yes, sir, Chairman. Our Deputy Finance Director, Mr. Cooper, will take that on as I will sit back and just
Enjoy the
let him
ride.
be the brains and I'll be the beauty today. How
There
about
you
that?
go. I like it.
Okay, Jeff Cooper, Deputy Finance Director. This is the FY 2021 fourth quarter budget report. Keep in mind, this is unaudited and not final. We're still posting activity from FY 2021, as well as potential adjustments. We have auditors in the house this week, actually, so, but this will give you a pretty good idea of how we did. So the purpose is to present highlights of the City of St. Cloud fourth quarter budget report. It's going to present an overview of the city revenues, expenditures, and key department statistics for the fiscal year. And reporting period is October 1st, 2020 through September 30th of 2021. So here's our top 10 revenues. I'll spare you the reading the figures for you, but we like to be at or near 100%, or even a little bit over is great. So as you go down, you'll see that impact fees are at 164% of our original budgeted amount, and that is all inclusive of all impact fees: water, sewer, sanitation, police, fire,
Why such a,
mobility fees.
why such a off, why such an
Just-
under budgeted type of thing when, I'm just assuming that's under budgeted. Why did we go over so much? Why weren't we closer, or what changed that made us think, let's do 22 million and now it's 36? It's kind of a pretty big difference.
Mainly higher than anticipated growth. I didn't specifically go into this one. Since it was over, I'm more worried about the under ones.
Well, no, I get it. I was just curious when we were setting up a budget, and I was just kind of curious. That seems like, I'm really happy when we're over. I'm hoping that things will improve with, the 75% one, but
Yeah, I think part of the reason was the original revenue estimates for this year were done directly pre-COVID by my predecessor. And then I got here and was totally green, learning the ropes. So I didn't really change them at that time. So, and things probably changed in the meantime. But
I like the overages. I'm not
Yeah,
complaining.
Well, I think if I may, Deputy, we have a couple anomalies too. Transition was one. We obviously always strive a little bit more conservative, but also with impact fees, we didn't have some factors that we're trying to incorporate now, which is an engagement with the DRC to know what's coming, and actually say, hey, we have a community now, that's coming in with 168 houses, and kind of project that and in trying to connect all the pieces. This kind of correlates to the city council mentality, where we're trying to be educated in growth and controlled growth, where if we know kind of what's coming, we can get all the pieces: water needs, sewer infrastructure, so we're trying to be a little bit more diligent. We're still learning with that piece, because we're trying to get away from the methodology of budgeting. Budgeting, as my deputy always says, is an art form. And so we're trying to get away from just plus, minus, subtract, and look at trends. We're trying to really get ahead of the industry and what's happening. So using the DRC component and knowing that is a big factor that will definitely give performance a little bit better, so we're not far off. And also on the other side, when he kind of gets to it, is reviewing that we have capital projects out there that are using these impact fees in a good interval, so we don't have those balances sitting out there too. So some of the factors that we've kind of incorporated to get better at the projections.
No problem.
Wendy, just a quick question. A couple of meetings ago, we were talking about impact fees, and I raised the question, does any of that money go towards the construction of new fire stations, for example? It was our major topic, and at that point, it was unclear whether any of this money would be going towards the fire stations that are needed in some of these new areas. Has there been any more clarification?
So we do. So impact fees, as long as they are, because we've increased capacity, that's the reason why sometimes we don't, but they do, right? We have a fire impact fee that should be for equipment, buildings, new structures. But if, let's say, we are refurbishing an existing fire station that's not covering any new service areas, we cannot use impact fees, right?
Okay.
Now, if that area that's being serviced is new, and that's what the impact fee is for, is to cover new service areas, yes, of course we would. So it's kind of not confusing, but hard for sometimes people to understand that, let's say, if we make an extension, for example, to our Minnesota fire station and we want to add administrative, we're not adding capacity. We're just, we're increasing the size, so we can't use impact fees for that service. But if we're going to cover the south side of St. Cloud and build a whole new fire station, that now we're covering that side and we have that need due to, whatever agreements we have, absolutely we'll use that. Our approach on that too, new development, has been also that the deputy and I have the same philosophy. We don't we love debt because it has some power to it, but we're not in love with debt, right? So we try to do everything with our existing cash needs too, and that's the next plan is we do have some fire stations planned out, 35 and 32. We always get confused between 31 and 32, using existing fees that we have, and not debting out, you know what I mean? So, and then we're also in the works right now for a new tower truck, a ladder truck, and using 120 funds. So we want to use existing cash flow and use that instead of debting out too. So there's some plans in the works too. But that's primarily what drives the impact fee is new service capacity. And I don't like to live in the gray area. So if I have to think too much of it and dissect it, I'm like, that's a no, right? And we'll try to find new funding strategies.
Thank you.
Uh-huh.
Is 32 Kissimmee Park Road area?
No, 32.
32
We
is-
went through this, right?
32 is down Canoe Creek.
Yeah, yes. Canoe Creek,
Which one's the rebuild?
32.
32.
What's Kissimmee Park Road? Because I know they have that very, very tight, compact, but they have the land. They're nearest to the turnpike.
31.
32.
Yeah, 32, right?
That's
Well,
32.
that's
No.
what I'm talking-
Oh, okay, because the other one down Canoe
31.
Creek.
on
32 is in
Minnesota,
Kissimmee
32.
Park Road.
Yeah, right
Because that's
by
the
it.
one that you
Near
did
the
the tour.
turnpike.
Yes.
Yeah,
Yes.
okay, okay.
That's what, because
Yeah.
that we should be able to have funding, aren't we, annexing some stuff in, I would say south of that area on the other side of the turnpike, isn't that gonna be ours, or is ours already? I see they're clearing the land on, you go over the Kissimmee Park Road and to the right, that's.
Yes, but we haven't annexed that just yet, but definitely Kissimmee Park Road is in one of those that we have, funding we've talked with
Okay,
and
yeah.
coordinated with the fire chief already to get that
place
going.
definitely needs.
Yeah, so 32 and 35 are on the till right now, priority ones this funded year.
Gotcha,
Mm-hmm.
awesome.
So before we move on to our newest member, in your packet towards the back, there's a description of these taxes and fees for your reading and enjoyment. So if you have trouble sleeping tonight, please feel free to read through those. It's actually, I find it interesting, but
You laugh about that, but I will actually do
but I'm an
that.
accountant. So it's enlightening. So the 1% fund is at 75%. However, the month of August, the month of September, and the fourth quarter postings have not yet occurred. So given my expectation of what we're going to receive, we're going to be approximately 94% in there, which is great compared to where we started this fiscal year. We were expecting way less than that, so it's actually up to, we collect about $470,000 per month and approximately $200,000 in quarterly into this account, which we can use for equipment purchases. We buy our city vehicles out of there right now, and we're planning on buying our ladder truck, which is somewhere in the neighborhood of $1.5 million out of there. So it's a really beneficial fund for us. The next two are 88%, but again, we're missing September. Haven't received September in those, so we expect those to be approximately 95%. So bottom line, budgeted, our major revenues are at 114% of our estimates, so that's good news. Any questions on the revenues? We'll go on to the revenues broken down by major fund. The general fund is at 82%, which doesn't look great, but you have to remember in the general fund, part of the budgeted amount is prior year fund balance. Prior year fund balance we've already collected in a previous year, so we're excluding prior year fund balance, we're at approximately 100%. Should be noted also, $1.2+ million of that is American Rescue Plan Act funding. So that has yet to be determined how that's going to be spent. The water fund is at 103%. Part of the reason for that is there's $2.44 million in American Rescue Plan Act funding also sitting in the water fund. So it, again, yet to be determined how we're going to expend that that money. Sewer fund, 109%. Sanitation fund is 85%. The reason for that is the outside landfill fees outside the city were projected prior to the departure of one of the major carriers, cannot recall which one, Waste Management, I believe. And we're starting to get some of the outside the city landfill fees back up, but when these revenue projections were done, that was prior to losing, a big account because they thought we were charging too much. So St. Cloud, the OUC interlocal agreements at 98%, which is where we expect it to be. The building fund is 89%, and stormwater is at 98%. So did well by fund as well. On to major fund expenditures. This time of year, we generally would expect them to be in the mid to upper 80 percentile. I mean, you really don't want to spend 100% of your money in, or more. So the general fund is at 82%. Again, the general fund budget includes city council contingency, so there's $4.5 million in city council contingency that, of course, didn't get spent. We also had some excess salary and benefit funding due to just turnover and same thing that's happening and with companies across the United States is just trying to keep people hired. Tends to be a challenge. The water fund only spent 78% of their budgeted funding. Again, $2.4 million of that budget is actually American Rescue Plan Act funding that didn't get spent. So,
On that, is that part of the cost for the pigging and for the going after the brown water problem?
No, sir. The American recovery money is related to loss of revenue due to COVID-19 that the federal government came. It's normally 2 tranches right now. So for us, the first tranche was $4.8 million that was given to us. Second tranche will be about the same. When the deputy mentions about it not being either expensed but reflected on revenue, there are some plans right now that there's about half of that money, $2.4 million, is going to go to capital projects for the water sewer, one of them being Water Plant 4. They have some piping issues that they'd like to handle, and they would be investing in that. And then for the general fund, there still talks about, we talked with other municipalities to give the city manager some ideas on how to spend that remaining money. So because we haven't expensed it, budget is higher, and it looks, our performance is better because we spent less, but really it's because we got an inflated, $2 million in the general and then in the water fund. So no, that was, like I said, it's due to the COVID-19 federal assistance money, and we're expecting a second tranche in the latter of the year.
On to the stormwater fund is at 65%. The primary reason for that is they have $1 million project, SW 2006 for Illinois Avenue pipelining that has not yet been expended, but that project is in process, so it will be. Any questions on major fund expenditures? If not, we'll go on to the major fund surplus and deficit. This is basically comparing your actual collected revenues to your actual expenditures, which also include encumbrances, basically purchase orders that have yet to be expended. So for the general fund, they're about right on zero. They spent, including the encumbrances now, a little bit more than was collected. The water fund has a surplus of $6.2 million. Again, $2.4 million of that is the American Rescue Plan Act funding. The sewer fund is $4.5 million surplus. Sanitation fund spent slightly more than they took in, but, you know, again, they're encumbrances, so this is not cash. St. Cloud OUC interlocal, 351,000 surplus. The building fund, $3.6 million deficit. The reason for that is the atrium, 3.5 plus $1 million City Hall atrium addition. We needed to get that money encumbered / spent. Not sure what the start date for that project is, but we're looking forward to that money getting spent because we were out of bounds as far as having too much fund balance there. So thanks to procurement and the building department for getting that through the process.
Can I give some history, just because we have new members, so there's a lot of information going through, and it's kind of like, just let me fill in the gaps, because I hope when you see $3.6 million deficit, you're like, yowzers, right? So the building fund has a requirement by Florida statute that they cannot keep 4 years of an excessive amount of reserves, which we were in that arena. So what they did was they developed a project that's right now projected at a cost of $3.5 million, which would add about 30,000 square feet. This middle area here in City Council, that's the bridge, and all that would be office plus security, one entrance, the council chambers going downstairs, and just a whole revamp to get more space. With obviously procurement, they set up a PO, issued, bid it out, got a contractor, and this is the encumbrance that you see out there. But we don't have the data as to actual shovels in the dirt, going through. So we have satisfied to a certain extent the compliance that we were deficient on, that you should find on the ACFR. The annual comprehensive financial report. You'll see on the final tabs, again, if you have trouble sleeping at night, look at that back sheet, read it up, and it'll say, hey, you're not in compliance. This is the effort to get into compliance.
Understood, thank you.
You guys are talking about a packet. I'm not, what packet are you referring to?
Did I get these?
This one here? Because I was just looking for the pages you were referring to with some of the numbers. Because I don't see the numbers here. On pages, just the beginning, the first few pages is what we're referring to in the packet?
Yes, sir. So each fund is in fund order, and it goes, and it'll tell you the percentage that we actually receive by date. You are correct, and no, if we can put a note, it does not have a page number to reference, so we need to add that. But it'll go through the one half sales tax revenue. Let me tell you what page. We have 12 pages of it, and it does have a table of contents, but it's not listing.
Should be going general fund next, I'm assuming? Well, no.
No, he's just doing the presentation for the screens here. This is actually a further explanation of what's been posted and what's not per fund. So for example, the 460 fund, which is the building fund we're talking about right now, is on what would be page 2, 3, 4, 8. Page 8, it'll say Fund 460, and it explains to you what the building fees and building permits, but it just gives you the review of what's anticipated, what's in budget, that should mirror that amount, and then total received at that stage. So this is just more reference, that it doesn't automatically correlate to the screenshot one for one.
Okay.
Yeah, the presentation is meant to just be an overview for you. That way we're not going too far into the weeds. But if you want more information, like what the fund is for, which will be good for our new member. The Stormwater Fund has a surplus of $1.2 million, but again, $1 million of that is the project SW 2006 for the Illinois Avenue pipelining. Next is our general fund departmental expenditures. And so percent of budget remaining, you know, we would like to be the 15% or less on the whole. As you can see, city council's at 91%, but the note at the bottom indicates they have $4.837 million in city council contingency that was not needed. So that's why theirs is so out of whack. City manager, public information had 25% of their budget left over. They carry a lot of the citywide needs there. So that's halfway to be expected. The only other one that I would consider noting is Public Works. It says 31% of budget remaining. That is misleading because during FY 2021, the Turf and Landscape Division was changed from Public Works to Parks and Recreation. At that time, the funding was not actually moved because Parks and Recreation had enough to cover it. So that's why Public Works has such a small percentage of their budget like actually spent because we left the turf and landscaping funding there. If we'd had moved it, Public Works would be at about 11%. And Parks and Rec would be at about 27%. And so that leaves us total expenditures. So basically we spent 82% of our budgeted funding, and that includes the money for city council contingency. So, and that is all. Any questions I can answer? As I've mentioned in previous meetings, this presentation is wholly flexible. So anything you would like to see going forward, please feel free to email me, jeffrey.cooper@stcloud.org, and I'll be more than happy to incorporate it for you. It's kind of a living document, so we can make it whatever is most meaningful to you.
Chairman, let me, for what it's worth, suggest the following. When we did our tour of the fire department and so forth, that was just very enlightening for me personally, and I think some of the others. And I would like to propose that somewhere along the line, we have the opportunity to say, look at other departments, like the water department or what have you, and get a little better feel for what they do, what they need, and what have you. So if we could.
Yeah, I know we were going to get with the chief of police because there was an initiative to the public safety building, and we had a committee and things of that nature, and so we went. And that's how I got to see the fire departments. That's why I wanted us to go to the fire departments. But the chief also takes us to the police department, and so we can get a look at how they do business. But I do agree. I think we should, when we see Parks and Rec, there was talk several years ago about, changing it, expanding it, because we invest money into this. Parks and Recs, I feel, contribute a lot to the city, and people come there and do events in the pool and the basketball, but we'll spend $200,000 or $400,000 to fix their roof.
When we were doing the budget and she going through all of these different parks and that, I'm saying, had no idea where they all, and I think I've driven through most of the streets, so any of these visits would be helpful.
I think it would be good. We can, if we can get with Bill just to maybe touch base with some of these directors. I think police, Parks and Rec, maybe water sewer, kind of get some visuals there. And if you guys think of other things, hey, let them look at this, because when it comes into July, we're going to go over the budget, and people will come in. That's why I wanted us to see the fire when they come in at times and say, hey, we need this or we need that. You can go, I understand what they're talking about. I get it. I had issues one year. The fire department was only like 3 or 4 years old, and they wanted new carpet. Well, why don't put tile in there then? Why are we spending this ungodly amount of money? We just built this place a few years back, and this was several years ago. And so once you start seeing these things and seeing the needs, and then when you go to Station 32, you're like, they're
Bingo.
sleeping on top of each other.
Yeah.
Literally, men and women are within, you can hold
Like that.
hands
Laying there, yeah.
when you get out of bed, and it's just insane that it's that way. So I know they're working on its priorities, as they said, but it was good for the board to see. And so, I agree with you. I think it'd be a great idea, to continue with that process, and let's look at fire, let's look at police,
Please.
Parks and Rec,
Water. sewer.
water, sewer, things of that nature, and see, okay, what big items are coming and why, maybe, so we can get a visual for it, I think would be beneficial for the board members that we do have here.
Absolutely. We can coordinate, we'll, also offer out the opinion to go to sanitation, see the transfer station. It's a business type. The deputy and I have had the opportunity with police, fire, water. We go to their locations and talk about what their needs are, and we've built partnerships that help us understand when they're talking about something. It's not to have sympathy, but to have objective view that, hey, it paints a picture that's really accurate to say, I understand what you're saying versus what, and we always have what we call aha moments, because there's a lot of people that say, hey, this is how it should work, and we always find out it works differently, their operation needs and everything, so it's very beneficial. So we can contact those directors to kind of coordinate through Bill and all that to see what works for your all schedule, and that way you have a visual of what's going on. Because we've talked about this, and as we prepare, 23, 24 is a big capital year for the city, all across. You know what I mean? It's time, it's coming, so that way you got a good visual ahead of time, and we're ahead of the curve.
Yeah, I appreciate that. And again, I think when maybe if you can have some recommendations, give you time for our next meeting. So on the 26th, you can go, hey, I spoke to this group and they said, and just general dates, because
Yeah.
I know we're all busy, we have schedules, but if we can futuristically go, hey, what do you guys think about March 10th for this division? Maybe have a couple for each one, so in case, say, well, he's busy, she's busy, that's a better date
Sure.
for each one that you think would benefit us as well. And I think we got all, from January until June, I think would be good to get them all in, and then by the time the budget comes in,
Yeah.
when
Absolutely.
we have to
Very
sit on the budget and listen, then we're gonna be very familiar with how things are run. And that's why I recommended when we did fire, because I
Very
think
good.
everybody just got
Boy, it
a
was
whole
great.
new, now you see why we
Very
need
great.
a ladder truck, and you understand the value and how much things cost. A truck's what, 1.5?
Yep.
That we're looking at, and they weren't spending this ungodly amount, like $70,000 to fix it.
Yeah.
And fix, it was just
Keep
craziness, so.
fixing and fixing and.
Yeah, so, I like it, so if you can, just it should give us time to
Sure.
just start talking to people, and if we need more time, that's great, but I figure a quarter should give us an idea, like, hey, what do you think about these dates?
Absolutely.
moving forward?
We'll get you some times and see what works for directors and what they'll
Yes,
do.
and that'll be great, and that gives them time to, hey, pitch it, you want things to come your direction, and this is what we're doing, this kind of be a good selling point to.
Sure.
It
Absolutely.
didn't take much to sell 32, so,
Yeah.
pretty simple.
Mm-hmm.
Any other questions for Wendy?
No.
Thank you for your breaking that down for us. All right, let's go other business. Looks like next future meeting is going to be January 25th. So mark your calendars, and maybe we'll have some numbers there. Something we're probably going to need to be made aware of, and if we can make the members that aren't here, I believe this is going to be, I'm thinking meeting 2 that they've missed.
Yeah.
And if I'm correct with the bylaws, and it's just, I just know, I want to make sure we stick to the bylaws. They're going to need to be aware of, hey, are you committed to this? And if they are, they're going to have, they are, if I'm correct or not, they won't be official voting members. They have to come in, sit here and go, hey, I missed these meetings because I forgot. Or I just didn't think about it. Then the remaining board have to really vote for them to come back in.
I
I've had this
haven't-
happen twice.
I have not been successful getting in contact with Kyle Bush by phone or email, so I'm assuming he does not want to participate anymore. And member Piscatio was on vacation in July, and then today she was not able to make it.
Okay, so,
But I'm gonna speak with her about her commitment, but I'm gonna go with Bush is not gonna
well,
continue.
even commitment or not, I mean, asking or conferring, whatever, but if I'm correct, the bylaws, if you miss 2 meetings.
Right.
They are not voting members until they present themselves when they come here. And again, I'm just going by the bylaws that we have.
Yes.
If it's changed, that's fine, but then they go, hey, I missed because I'm on vacation, which is perfectly understandable, and I missed because I had to work, whatever, and then we literally have to go, recommendation for so-and-so to be back on the board, and if you guys go, no, I don't think that's a good enough excuse, you're not committed to this. Then, no, and then they would be, have a great day, thank you for your time. Or we go, it makes sense, you were on vacation, or you were sick with COVID on the second one. It didn't, I had the situation where one of our members literally missed it by 1 day. She was out January, we'll say 10th, and then the next meeting the following year was like January 9th, and she missed the January 9th meeting. And I was told by the director, hey, she can't be a voting member until she's voted back in by missing literally the 364th day. She missed that one thing. So these guys have missed meetings pretty close back to back. We technically can only have like 4 meetings, and then we have our budgets. So I guess that's why the bylaws are that, saying, hey, you missed 2 meetings, you just missed a half a year.
And
So,
it should be noted, I'm the only one old enough to have the excuse that I forgot. Don't put it in the minutes.
I second that. So just if you can let them know, and if she or he are committed to come in, and when they come in, that they will have to be prepared. If I'm correct, I might be wrong, that, hey, they're not a voting member, I can't vote for minutes, can't do anything until we reappoint them as voting members, if that's what they choose, and we accept whatever their excuses were moving forward.
A quick question, we're back on the water thing. When we were here for the budget meeting with the city council, there was a big presentation about this other, what's the organization taking over our water. Has there been any movement on that, or?
Yes, sir. So when you had that presentation, where we were was that Stantec, which is the consulting firm for Toho Water Authority, which they would be managing, the management of the utility, if that's the way it goes. Stantec had done their initial and started preliminary reviews, and we were in discussions with them along with the Environmental Utilities Director. We then have hired and contracted Reftilis, who's our consultant, to vet and do the analysis on our side, so that it hasn't been determined yet at a meeting set, because it takes a couple of months to kind of vet this out. They'll come kind of together and compare where they are, and then present that with the city manager, and they'll decide what interval to present to then council. And I think they're also, with the impending election, they were waiting to have a full council to kind of keep moving. But right now, we're at analysis from both the consulting firms. Everybody's got the information that they need in order to conduct that, and then they'll set up those dates with the city manager, and he'll advise us on that as we move forward. But that would be the plan, sir.
Thank you.
All right, any questions,
No, I think
comments? Looks like there's no one in the audience that wants to make a comment. So if there is nothing more, meeting adjourned.
Thank you.